Good afternoon, everybody. Luis here, wishing you a happy new week. And this is your weekly mortgage update to give you some insight on where the housing market is at and where it's going. Again, if there's anything you want me to cover or research, please let me know. Simply reply to the email or comment below. And on that note, let's start with some notable news like this one. Failure to raise the debt ceiling would be an economic catastrophe, Janet Yellen says. Yes, it's kind of true, and it seems like, look at this dog and pony. It seems like we go through this dog and pony show every time the debt ceiling thing comes up. So I don't know what to even think of it. I'm sure it's going to get worked out. Looking at last week's economic calendar, last week was also not good for inflation. We went over this ISM manufacturing report last week, and again, it was a lot stronger than expected, and this is very inflationary and not good for mortgage rates. And of course, on Wednesday, the Federal Reserve met, announced that another 0.25% rate hike was needed to tame inflation. So mortgage rates actually dropped on the news, and we were looking really good. However, on Friday, the non-farm payroll report came out, and it came in better than expected. The forecast was 190,000 new jobs, but the report came back at 253,000 new jobs, which again is much hotter. And the reason I'm sharing all of this is because all this news is very inflationary, because more jobs equals more money to spend, which means higher demand, and that drives the price of goods up. It was looking really good, and then Friday, everything looks like the economy is growing and expanding, and that is causing the mortgage rates to go up. Let's see. This week we have Monday and Tuesday is pretty quiet, but on Wednesday we have the CPI inflation report for April. So mortgage rates are definitely going to react to this report. And the very next day we have the producer price index, which is the wholesale prices or wholesale inflation. That's going to be released, and we had a huge drop last month on this PPI report. And again, these two reports have such a huge impact on the bond market. And looking at the bond market, let's take a look. The 10-year today is at 3.5%. which is actually down from last week. Last week we were at 3.57. So this is actually good. So let's see what it has done to the actual mortgage rates. So today, this is all based on a $500,000 purchase, owner-occupied single family residence, and a 740 FICO. We have the VA at 5.875. We have FHA at 5.75, and we have conventional, which is 6.875. So they went down just a little tiny bit, like an 8. So they are holding steady, and rates did drop last Thursday and are right back up where they were prior to the FOMC meeting. Bottom line, active home buyers stay the course. The demand is ticking up consistently, and we're seriously having to compete against 30, 40 offers in some cases. Demand is definitely up. And since the supply continues to be low, the prices are continuing to increase. That is all I have for this week. Follow me on Instagram at Renteria_home loans for daily homebuyer tips and day-to-day updates. I appreciate you all, and have a wonderful day.